how do you see the trends and practices in client acquisition beyond just prospecting, which is talking about cross-sell and upsell, which have been, our age-old mechanisms of selling in the past. How have they evolved, and how are you using digital economies to increase the cross-sell and the upsells that we talk about? Again, back to focusing on value from a customer's perspective.
Before I come on to this question, I just wanted to add a couple of points to the previous question, which is on how digital banks or digital processes in India, particularly because we don't have a digital bank, how are they evolving? So, just a little bit of a different flavor to the points that were made by Shalini and Samir. When the digital journey started, sometimes we keep making the mistake thinking that digital journey is only from a savings customer perspective. Actually, no, there is enough and more happening on the lending side as well. And clearly a lot happening on the credit cards, which Shalini mentioned as a digital journey. In fact, credit cards is probably, and personal loans are those kind of products which have actually evolved much faster than even the liabilities journeys on the digital, and there are a larger percentages of your businesses now happening digitally. So that's point number one. Specifically to liabilities, 4 years back when RBI actually allowed some of these digital journeys to happen through the OTP process on Aadhaar, the value build-up on the digital accounts vis-a-vis a physically sourced account was very different. The values were very, very low on the digital side. People were seeing those digital accounts as wallet plus and nothing else. So, you do it for small value, toll kind of transaction, and don't really, save in the account or invest in the account. But those things have started to change with a lot of engagement practices, plus a lot of other digital journeys coming into the entire journey of a customer acquisition and life cycle. Some of those value perspectives have started to change. So that's a very, very healthy trend on that side. And I think in a few years from now, the primary mode of acquisition, which in numbers right now is already digital, but not in value, will actually start to become primary in value terms as well. And that's, I think, when the big, change and shift will happen. So, we've all grown up in a situation where we used to acquire a customer first and then make him go on to the digital channels. And clearly the world is now coming where you acquire digitally and then put a man or a relationship manager behind it after your analytics bit to figure out whether the guy is good or bad. So the entire acquisition relationship and your sales strategy is in a way changing and is going to change faster from here on. So that's the big shift that's happening. How do you prepare for that? How do you make sure that you have the right tools available? Clearly, analytics plays a big part. You have to really invest in that, make sure that you're able to enhance the data that you already have through other sources, and then figure out the right propensity model around making sure that you pitch the right product at the right time for that customer in his lifecycle journey. How do you make the journeys right? How do you start to not look at assets and liabilities at two different streams, but look at the customer and bring both of them together in a way that there is least friction in the way the journey is constructed? We have a large partnership on the credit card side as well. And we have, a huge run rate of credit cards happening on that side. Now that's one different stream vertical that's been created in the organization. And that's how most banks have actually progressed over a period of time. How do you bring that journey on a platform, in a digital way, in such a way that when the card is getting onboarded, can the savings account also get onboarded if the customer so desires? And then how do you link the two to be able to make sure there is interaction and there is payment and there is transactions around it? I think those are the changes that you need to bring about big time. Digital does not only mean pure net and mobile banking. Digital also needs to have an analytics engine, a data layer, to be able to work on the right set of customers, and then you have to have a full engagement framework. Let's not forget there is still a large population, especially in India, which does prefer a human interaction, and that's where the larger value still resides. It's not as if all the fully digital people have all the value as well. Most investment discussions happen still face to face, at least on the larger value side. Maybe the SIPs, etc., happen digitally now much more than physically, but the value still resides, in a face-to-face interaction. So you have to balance the two. When the RM goes and talks to a client, and when the branch is talking to a client in the system, why should the process of the branch or the RM be any different from what the customer will see on a net banking or a mobile banking when he's doing it himself? So the human element in the ops area needs to be reduced as much as possible. And everything has to be STP, the journey has to be smooth, there has to be adequate foolproofing of the journey in such a way that you're able to give a seamless experience. And clearly the tools have to be available to all your front-end channels as well. There can't be any reason why a call center should not be booking your FD straight away, or for that matter, doing your investment straight away, or even an insurance product for that matter. So a lot of that thinking and has to be done, and the wiring has to really change quite a bit in the way the organization is stitched together. Those time of having separate verticals around separate channels, I think that's really not there anymore. You need to bring them together and think and rewire basis the customer journey and not basis your structure.